So good morning and welcome. I hope you all successfully were able to join on the Zoom link. Here at Buchan, we value knowledge exchange and conversations with industry leaders. So we're very excited to have the people that are here going to talk to you today. And through this, we seek to develop thought leadership that will support all of you in the broader industry. Today, we invite you to join a conversation where we seek to understand opportunities, challenge assumptions, and redefine problems as a way of identifying alternative strategies and solutions for regional tourism. I'd firstly like to welcome Damien Little, a Director of AHS Advisory, who is here in Melbourne with myself, and also a spring fan from AHS Sydney office. And they will run through their intensive research across regional areas in Victoria and New South Wales. We'll then be joined by Jennifer Davey, Director of AHS Sydney, who will facilitate a discussion with industry entrepreneurs, or could we say trailblazers, Max Player and Obeid, to look at their incredible development and leadership in regional tourism. So handing over to you, Damien. Welcome to everyone that has joined us today.
Thank you, Valerie. Let's just share my screen here, get the presentation back up. Yeah, thank you once again. Given the looming interest in regional tourism as a result of the pandemic and a lot of discussion on its future potential, we've decided to take a data-driven approach to assessing a number of tourism regions across Victoria and New South Wales to better understand the differences, strengths and opportunities of each region. There's a lot of data, so we'll try and get through it as quickly as possible, but hopefully we leave enough time to help you understand what we're going through. As we went through this, we ended up coming up with a scorecard approach to assessing the regions. We've used 47 data points spread across 5 categories, socio-economic and tourism data. And those 5 categories can be seen there: economic indicators, tourism's contribution to the economy, hotel performance, tourism visitation, and tourism infrastructure. Now, I won't go through all the 47 data points, but you do see what a couple of the key types of themes are under each of those categories. And once we compiled all of this data, we then applied a weighting to each of the 5 categories so that they come to 100%, but we've also applied weightings within each of the categories of all the various data points. Now, that obviously entails some subjectivity there on our behalf. And so to understand how the results could vary with different weightings, we will look at a number of scenarios with different weighting structures. Oops, sorry. Moving on to Victoria first. The tourism regions that we have shown in Victoria basically focus around 8 regions: Daylesford and the Macedon Ranges, Yarra Valley and the Dandenong Ranges, Mornington Peninsula, Phillip Island, Great Ocean Road, Goldfields, High Country and Gippsland. We looked at regions that were proximate to Melbourne within a 2 to 3 hour drive time. Some of these areas are outside of that drive time, but being prominent tourism regions in the state, we kept them in. We excluded Geelong and Ballerine because primarily it covers Geelong, a large commercial market, and our focus really is looking at leisure tourism destinations more so. Moving on to the scorecard results, what we can see here is for each of the 5 categories, you can see rankings for each of those regions, and then the column to the right in yellow, that's the overall rank that we see. I don't want to go into too much detail here. There's a lot of numbers, but overall, Great Ocean Road ranked 1, Mornington Peninsula ranked 2, and the Goldfields ranked 3. Now, as I said, there's some subjectivity in terms of how we've weighted the importance of each of these 5 categories, as well as the data points within each of them. And so we looked at a range of scenarios to see how that varies the results in terms of those rankings. Now, if we look at the economic indicators and we apply a majority of the weighting to economic indicators, we can see that Mornington Peninsula comes out first, followed by Yarra Valley and the Dandenong Ranges, and then Goldfields. Each of these three regions all rank highly in terms of total gross regional product, or GRP. They all have large population bases and large working age populations, high mean total income levels, and a high volume of businesses operating within those regions. So they've come out the top three rank in those regions. Gippsland and Great Ocean Road, though, were not too far behind, sitting fourth and fifth. Moving on to tourism's contribution to the economy within each of the regions. Overall, you can see here slightly different results. Great Ocean Road coming in at number 1, High Country coming in at number 2, and Mornington Peninsula at number 3. And again, this is with contribution as the highest weighting, but this is still an overall weighting, taking into account the other 4 categories. And if we look within just the tourism's contribution to the economy for each region, High Country is actually ranked number 1, Great Ocean Road 2, and Phillip Island, that has an important tourism industry for that region, comes in at number 3. Just to give you a bit of a sense of how that is, on the green bars to the right show tourism gross regional product, and the blue bars to the left show the percentage share of tourism GRP to total GRP. So if we look at the green bars, we can see that the leading regions in terms of total volume of tourism gross regional product is Great Ocean Road first, High Country coming in second, and Mornington Peninsula third, and they're all very close to each other. But if we look to the blue side, we can see that clearly tourism is a very important industry for Phillip Island, with almost 50% share of tourism GRP to total GRP, and that High Country also has a fairly large share, around 30% tourism GRP to total GRP. And, you know, it's also one of the largest tourism GRP numbers by volume. Similarly, Great Ocean Road, quite a bit smaller though, around 18% tourism share of total GRP. And in contrast, we can see Mornington Peninsula, that has one of the highest tourism gross regional products in terms of dollar amounts, has a much smaller share in terms of tourism's importance to total GRP, coming in at around 10%. Moving along now, looking with visitation, tourism arrivals data as the highest weighting. We can see Great Ocean Road comes in again at number 1, with the same 3 regions ranking in the top 3, this time Mornington Peninsula 2, and High Country coming in at number 3. And just now exploring some of the visitation data in a little bit more detail. This next series of charts you will see on the vertical axis is the visitation numbers. On the horizontal axis is the spend, and that is spend per visitor over the duration of their stay, not spend per night. And the bubble sizes are representative of the overall expenditure amount within tourism. And we can see in terms of expenditure, Great Ocean Road has the largest bubble, and that represents approximately $1.1 billion of spend with domestic overnight visitors. In terms of largest visitation, it's also Great Ocean Road coming in at 2.7 million visitors. However, spend per visitor over the duration of the stay is the highest in High Country at about $496. Followed by the Great Ocean Road at $394 per visitor, and Phillip Island $384. If we contrast this to international visitors, we can see that the bubbles are all much lower on the chart, indicating much lower levels of visitation, and quite a spread in terms of the spend across the various regions. Overall expenditure, Great Ocean Road remains the largest at 114 million. And also it has the largest visitation at about 1 million. Spend per visitor though, much higher for High Country at $675, Gippsland coming in at $442, and Mornington Peninsula an average spend per visitor over their stay of $329. And finally, moving on to domestic day trip visitors, again, we see a very different profile here. We have low spends, fairly tight range in terms of spends, but quite high visitation numbers. And so as we get higher on that chart, the bubbles get bigger because the similarity of spends are quite the same across. The top three largest visitation markets, being Mornington, Goldfields and Yarra Valley, are also the largest in terms of expenditure. And those three markets have quite a lot of commercial driven travel. They're all quite easily accessible from Melbourne, and that's what drives a lot of that larger share in terms of day trip visitors. And we can see those three markets clustered together, followed by Great Ocean Road and Gippsland. And as I mentioned, visitor spends fairly consistent, ranging from $80 to $110 across all 8 regions. Now, just to place this into some sort of contrast against Melbourne, what we're looking at now is total visitation, international, domestic overnight and domestic day trip, and the total tourism expenditure across those 3 markets. And we can see that, you know, the regional areas clearly much smaller than Melbourne, with lower spends. And of course, we wouldn't expect them to grow to rival the size of Melbourne. And Melbourne obviously has a significant volume of commercial business coming in as opposed to the regional areas. But it just does give some sense of the potential of regional markets to develop further and grow in scale and perhaps get a little bit closer to the capital city markets. The next scenario is weighting the hotel performance with the highest weighting. And here we see High Country drop out of the top 3. Great Ocean Road remains number 1. Mornington Peninsula remains number 2. And this time Goldfields pops in at number 3. Using a similar chart here, we have occupancy on the vertical axis, the average daily rates horizontally, and the size of the bubbles represents the census rooms available in each of these regions. Now, I do want to point out, we don't have data for Yarra Valley and Dandenong ranges, as well as Daylesford and Macedon ranges. There's insufficient participants for that data to be published, unfortunately, in those regions. But we have included the bubbles here just so that we can understand scale of those markets in terms of room counts to the other 6 regions. Now, what we can see here is that obviously the higher occupancy, the higher average daily rate drives RevPAR, and RevPAR is one of our data points in our scorecard analysis, and Mornington Peninsula has the highest RevPAR at $155, which is driven by occupancy levels at 69% and average daily rate at $226. That's followed by Great Ocean Road at $109 RevPAR and Phillip Island at $106. The High Country does have a high ADR of $205, but with a low occupancy of 44%, its RevPAR sits below those 3 markets. Great Ocean Road has the largest room supply at 2,566 rooms, and Daylesford and the Macedon ranges the smallest at 543. And again, throwing in the chart relative to Melbourne, we get a sense of the relatively small scale of supply in regional areas compared to the dominant capital city market here, Melbourne. But High Country and Mornington Peninsula doing well in regards to average rates. Obviously, their product is skewed towards the higher end. Melbourne's is a large market, obviously, with a very diverse range of products included in that overall average. Finally, looking at infrastructure, in terms of, you know, if we give infrastructure the highest weighting, tourism infrastructure that is, we see a little bit of a different results here, with Mornington Peninsula coming in first, Goldfields second, and Yarra Valley coming in third. Now, included in this is things like the hotel supply. So again, the scale of hotel supply, the tourism experience offering amongst the regions, and that range and depth of offering, as well as the accessibility of the regions. And just to give you a bit of a sense of what we're looking at, here on the right side in green, we've got again the census room counts. We can see how they vary by region fairly clearly here. A bit easier than the bubble chart we saw earlier. And on the left in the blue, we've got domestic visitor nights as well as international visitor nights thrown in the lighter blue colour. Generally, the scale across both of these is similar. Great Ocean Road highest, you know, Gippsland coming in at the next level, and so on. But just as a bit of an example here, Mornington Peninsula has 6.7 million visitor nights, right? And so if we divide that by 365 days and say assume 3 guests per room, we could get demand for about 6,150 odd rooms annually per day. However, the region only has 1,385 rooms in the census. So there's significantly more visitor nights than rooms available. And that's obviously because of visiting friends and relatives. The large accommodation, the traditional holiday accommodation that's available in these types of regions, that's now morphed into Airbnb listings and stays accommodation and so on. And there's also a component of educational tourism, you know, where people are staying for long periods of time and not really using tourism accommodation. But it does give a sense of, you know, the scale of the supply doesn't quite really match the scale of the visitation and the potential opportunities, and that's being brought about by how these markets have traditionally developed over time. Finally, in terms of equal weighting, if we just apply a 20% weighting to each of the 5 categories and you know, take all subjectivity out of it, we end up with the same overall weighting as our original weighting, with Great Ocean Road 1, Mornington Peninsula 2, and the Goldfields coming in at 3. Now, in addition to doing the scorecard and trying to understand how the regions vary from each other, we've also analysed supply in each of the regions. And I must point out that this analysis of supply focuses on destinations within each region that is leisure tourism driven, as opposed to destinations that are more commercially driven. Although I must say Ballarat and Bendigo, we consider both tourism and commercial destinations, and they've been kept within the analysis. So here we can see across the regions that 47% of supply overall fits within a room size of 20 to 50 rooms, and that within 7 of the 8 markets, that's a dominant category, with Phillip Island equally shared with even smaller category of 0 to 20 rooms, and in Gippsland, the dominant category is that 0 to 20 room number amongst the properties. Now, if we combine those 2 small categories, we can say that 82% of supply across the tourism regions have properties with less than 50 rooms. Phillip Island and Yarra Valley have the largest share of properties with more than 50 rooms, and the Great Ocean Road is the only region to have a property above 250 rooms. So small properties predominate across regional Victoria. In terms of management style, we can see that there's a very large proportion, 77%, that are independently operated, non-branded properties. So, you know, in conjunction with being small in scale, generally independent, Mornington Peninsula has the highest share of branded properties at 36%. So regional Victoria, generally an independent market. And then in terms of class scale, 38% of properties across the 8 regions are ranked at a mid-scale level. And we can see that in 5 of the 8 regions, this is the dominant category, particularly in Phillip Island, where mid-scale represents 75% of supply. We can see for the Mornington Peninsula that upper upscale represents the largest portion at 40%. In Daylesford and Macedon, it's upscale at 30% and upper mid-scale dominates in Yarra Valley, which is a fairly evenly distributed region at 24%. And while it's not highlighted in this chart, the High Country has the largest portion of luxury supply at 24% of properties or room count, followed by Daylesford at 14% and Yarra Valley at 13% luxury. So again, you know, if we summarise, we've got small properties independently managed, predominantly at a mid-scale level. Then if we look to meeting space, you know, the MICE market is certainly one that there's a lot of potential opportunity in regional areas. And we can see that 79% of properties offer very limited meeting space of 0 to 50 square metres. And this is quite consistent across most regions, although in Victoria, Daylesford and the Macedon ranges stands out as being quite significant different in the structure of its supply, where 40% of properties have 100 to 200 square metres of space and 80% of properties overall in that region offer more than 100 square metres of space. You know, so hopefully that profile gives a bit of a sense of what is out there, where the opportunities might lie. And I think it certainly indicates there's a lot of opportunity for branded higher tier properties of larger scale in some of our premier regional tourism destinations. I'll now pass on to Spring from the Sydney office to take us through regional New South Wales.
Thank you.
Spring, over to you.
Thank you. Let me just share my screen now. Great, thank you. Thank you, Damien, for the great explanation, thorough explanation on our methodology. So let me go to New South Wales. And so as we have done for Victoria, we have focused on a number of tourism regions. And this is a tourism region definition provided by Tourism Research Australia and adopted and used by Destination New South Wales. And you can really see that the regions that we have highlighted and the ones that we have chosen to analyze are the ones that are within immediate surrounding to Sydney, and also the ones that comprises destinations within 3 hours drive from Sydney. For this reason, we have excluded North Coast from our analysis. And something also that's important to note is that Capital Country is the tourism region within New South Wales, and therefore it doesn't include the area for ACT. Now, if I go on to the next slide, as Damien has done for Victoria, what I would also do is show through a series of scorecard scenarios that are calculated based on different weightings. Now, just to reiterate the purpose of the scorecard approach again, the scorecard was done not to say one tourism region is better than the other. It's really more to, through the analysis, what we're trying to understand is why the reasons why some regions are better ranked or better positioned for tourism than others, and also to understand some of the opportunities and challenges for the regions ahead. Now, in contrast to Victoria, and you will also see this on the following slide, is that the ranking for the top 3 regions are repetitively Hunter, South Coast, and Central New South Wales, and they're less scattered around the tourism regions. So let's step through the different scenarios for New South Wales. So the first scenario that we really looked at is one based on a weighting that's heavily skewed towards economic indicators. So unsurprisingly, you can see that the Hunter is ranked first in this case because it has cities including Newcastle and Maitland, which is the second most populated city in New South Wales. In fact, it has actually more population compared to Canberra, Sunshine Coast, and also Hobart. Now then, what we looked at then is what about a scenario or a weighting that's heavily skewed towards the actual economic contribution of tourism. Then in this scenario, what you can see is that South Coast is now ranked first. And on this next slide, you can really see the reason why. So again, on the left, what you can see is the relative importance of tourism industry within the economy. And on the right-hand side, what you can see is the dollar value of the actual economic contribution to the economy. So if I draw your attention to the Hunter, for example, when you look at this number, it produces the most tourism gross regional product out of the regions analyzed. Yeah, and that's, so one would say that maybe the Hunter has the largest tourism industry amongst the different tourism regions. However, that represents a smaller proportion of the economy due to the presence of other commercial industries. Now then, when you, on the other hand of the scale, you can see Blue Mountains, where you see a relatively smaller tourism industry. However, it produces a much, it represents a much more important industry to the economy. And that's really not just only because Blue Mountains is a smaller region in size. It's actually mostly due to the fact that it has the smallest economy. So when you compare that to Central Coast, which is actually the smallest region, Central Coast produces about 3.5 times more gross regional product than Blue Mountains. Then what we looked at, the next scenario that we really looked at is one when we really looked at tourism visitation, just the tourism demand. And you can see that South Coast, again, is the top region, followed by the Hunter and then the Central New South Wales. And so for this analysis, we broke it down into domestic overnight visitation, day-trip visitation, and international visitation. An interesting comparison, so on the graph, again, on the vertical axis, you have the number of visitors. On the horizontal axis, you have the spend per domestic overnight visitor. And the size of the bubble represents the total expenditure that's been captured in the different regions. An interesting comparison is one between the Hunter and the South Coast, in which you can see they really compete head-to-head. And one of the reasons for the big size within these two regions is the fact that both of these regions benefit from business-related visitation due to the presence of other commercial industries such as fisheries, agriculture, mining, and both of these regions have ports. So then if you look at the graph itself, you can see that the Hunter is positioned slightly above South Coast, and that's a representation of the fact that it captures a high proportion of visitor numbers. And when you look at South Coast, it's positioned more towards the right of the graph, which is a reflection of the fact that it captures a higher spend per domestic overnight visitor. Now, when we look at the data itself, we would then realize that this is really due to a higher average length of stay to the South Coast. And that's likely because the South Coast is spread over a long strip of land to the south of Sydney. Given that a lot of the destinations within South Coast are harder to access by the majority of population in New South Wales, they tend to stay a bit longer on the South Coast. Then the fact that actually due to the fact that it's geographically spread on a long strip of land and easier to access by ACT and Victoria, when you look at the comparison between the Hunter and South Coast, you can see that the South Coast receives the highest percentage of interstate visitors, whereas the Hunter received the highest percentage of intrastate visitors. Then at the other end of the scale, you can see a cluster of 3 tourism regions. And these are really the 3 regions that are within the 3 hours drive zone from Sydney. And therefore they are probably predominantly a day trip destination in comparison. Then what you can look at, what you can see on this slide is the international visitation pattern. And because it's on the same scale as compared to the previous one, I can just flip back a little bit just so you can see. The bubbles are positioned more towards the bottom, representing the fact that domestic overnight visitation is much more important to these regions compared to international visitation. Then if you look at the graph of the position of the bubbles, you can also see that they are more positioned towards the right. Now that's when we look at the data, we realize that that's not because each of the international visitors spend more per night. It's actually because they just stay longer. In fact, when we look at average spend per visitor night, we could see that international visitors spend only about half of what domestic overnight visitors spend. So we then realized that the data is somewhat distorted by the inclusion of visitation for education purposes, and especially for the Hunter and South Coast, in which 40% of international visitor nights in the Hunter region are actually spent for education, and 40% for the Hunter and 30% for South Coast. Now on the other end of the scale, what you can see is Blue Mountains. Blue Mountains is definitely easier to access from Sydney, and due to the amount of international day tours to the region, average length of stay into the Blue Mountains really stands out, and that's about 1/3 of the overall average in the identified tourism regions here. Then on the next slide, what's interesting to note is the kind of, I guess, the imbalance between regional New South Wales and the fact that, but despite Central Coast, Capital Country and Blue Mountains being the 3 regions that are closely located to Sydney and easy to access, the Hunter and South Coast still receives the majority of domestic day trip visitation. And actually, that's also a good indication of the good accessibility from Sydney to these regions by air, by road, by car, and also by public transport. Then on the summary slide, what we wanted to do is just to show you a comparison and just to put it into context with Sydney. Now, that big gap between Sydney and regional New South Wales is a gap, but it also represents somewhat the opportunity for regional New South Wales. Although we do recognize that an important proportion of visitation to Sydney are accounted for corporate travels. However, what that also means for regional New South Wales is that perhaps it's not just leisure investments that needs to go into this area, it's also business investment in order to stimulate business travel to the region, such as for meetings, conventions, incentive travels. And having a multi-dimensional economy is really important, and you can actually see it again on the hotel performance when we compare Sydney to regional New South Wales on the following slide. Now, the next scenario that we looked at was one that's looking more specifically at hotel performance. And as Damien mentioned, we're not only looking at the average performance per hotel, including such as RevPAR, revenue per available room. We're also looking at the total demand and total visitation captured in these tourism regions. And the Hunter, South Coast, and then Central New South Wales appear to be the top ranked regions for under this weighting. So how do hotels perform in different regions? So what you can see on this slide is on the vertical axis, you can see the occupancy rate. On the horizontal axis, you can see the average daily rates. An interesting thing to note is that when you look at it like this, you can see that the occupancy level performance across the tourism regions are somewhat similar, which reflects a similar trend in seasonality of business. And what's interesting to note is that the Blue Mountains really stands out at a higher price positioning. And that's because it has the smallest hotel supply compared to the other regions, and it has the highest proportion of hotels positioned at the high end. So some of them include one and only Hydro Majestic. And of course, Max and Suzanne can tell us a little bit more about LILIANFELS later. So what does it mean in context with Sydney? And that's what I was mentioning about having a multi-dimensional economy. The fact that Sydney is able to offset seasonality between its corporate travel and leisure travel means it's able to sit at a higher occupancy level as compared to the regional area. Now, one of the last scenarios that we looked at, and as Damien mentioned, is tourism infrastructure, including the variety of experience, the accessibility, and of course, hotel supply. Then on this following slide, what we did was a similar comparison between what you would say accommodation demand, where you have visiting nights, and then accommodation demand. When you look at it, it's easy to, and it's very evident to see that you can say that there's somewhat an imbalance between supply and demand on the South Coast, where you can see, a high amount of demand on the South Coast, but with relatively less demand. And that's also an indication, and similar to Victoria, that's likely because it's been captured in holiday rentals or visiting friends and relatives accommodation, as well as Airbnb. And then on the other side, well, and relatively speaking, what you would say is that in Central New South Wales, you can identify a high amount of supply inventory, but more supply and relatively less demand in this case. So now a comparison between all the scenarios and based on, different rankings, different weightings, we really always end up with these 3 regions as the top ranked tourism regions. And we can draw a few conclusions from this slide. Actually, one conclusion that we can perhaps draw is a comparison with Victoria, where you see a little bit more scattering of tourism regions when you see the different ranking. One would say that it's more imbalanced in regional New South Wales. And in fact, in the Hunter region and the South Coast region, visitation accounts for more than half of all 6 tourism regions that you can see here. Then the other conclusion I guess we can draw is that the success of a tourism region relies not only on tourism infrastructure, it also relies heavily on having a multi-dimensional economy where you can have a good mix of underlying economic and tourism drivers. So then, aside from looking at different tourism regions, as Damien mentioned as well, we also profiled a kind of hotel inventory, only the ones within 3 hours drive zone from Sydney, and also in the process we have taken out any regions that are not really leisure orientated and more commercial orientated. So that includes examples of that are, you know, Newcastle and Wollongong, because we really want to build up a picture and see what a typical leisure orientated regional hotel property look like. And the characteristics of these hotels are, you know, very similar. In terms of room count, about half of all properties have the average room count between 20 to 50 rooms, so relatively small. The majority of them are independently operated, which then you would say that there might be a good opportunity for hotel management company brands. Then what you can see on the next slide is approximately 1/3 of all properties are rented as mid-scale. The Hunter stands out with 40% of upscale. Then what the opportunity for the Hunter region perhaps is to have slightly more mid-scale properties. And then meeting space, more than 3/4 of all properties have very limited meeting space, ranging from 0 to 50 square meters. So with that conclude the discussion on regional New South Wales, and I just bring Damien back to talk about the similarities and differences between Victoria and New South Wales.
Thanks, Spring. And if I could just trouble you to move the slides for me, if we go to the next slide, just to you know, show some of the features side by side. We've broken down the rooms that we've identified into the various experience that we've also clustered or identified for the regions. And here we are double counting room supply if the regions offer more than one experience. And just, we can see straight away, beaches, surfing, boating is the largest bubbles for each of these regions. And that's unsurprising given the amount of great beach destinations we have all along the eastern coast, in fact, all the coastline of Australia. Something else that stands out is the food and wine bubble. You know, Victoria well known for food and wine, but with the Hunter region in New South Wales being a large region in terms of hotel supply, we have a larger bubble that offers a great food and wine experience compared to the supply in Victoria. Another one is action and adventure in the purple there, very small bubble for New South Wales. In Victoria, we've got high country, and we've classified the skiing that's available in the snowfields in the high country as action and adventure, whereas the ski areas in New South Wales haven't formed part of this analysis. And another one perhaps is nature and national parks. The areas that we've looked at in Victoria, whether it be the Otways along the Great Ocean Road, high country offering more than just skiing, but the mountain experience, and the national park areas along the lakes in Gippsland, outweighing that in New South Wales, where, for instance, along the south coast, the national parks tend to be a little bit further inland and most of the supply clustered along the beach. You go to the next slide, sorry, Spring. Here we've just compared the average tourism expenditure per visitor amongst all the regions. We can see New South Wales generally having a higher spend than Victorian markets. High country, though, pops in at number 1, thanks probably to the ski season that area has, and the high amounts of money spent on ski passes and accommodation during that peak season, and even parking and so on, all revolving around the cost of skiing. And we can also see that destinations that are easily accessible and close by generally tend to have a lower spend due to the higher volume of day trip visitors. And finally, looking at the room supply that we analysed, the regions are really quite similar. You know, if we look at room count of 20 to 50, New South Wales slightly more than 50%, Victoria slightly under 50%. If we look at, you know, independently managed, here we see a little bit more difference. Victoria at 77%, quite a bit more branded regional product in New South Wales, although independent still dominates at 67%. Almost the same portion of mid-scale supply dominating as the largest share for both of the regional markets, New South Wales and Victoria. And again, similar in terms of meeting space, majority of properties not really offering a meetings experience, and so potentially some opportunities in both states there. And we've probably taken up more time than we should have. A lot of data to get through. Apologise for that. But now moving on to our panel discussion, we'll have Jennifer Davey speaking with Guy Obeid, and then followed by Max Player. So I welcome Jennifer to take over from here.
Great, thank you, Damien. Obviously, this has been quite a detailed presentation, and I would just like to thank Buchan for allowing us to collaborate with them. But more importantly, the data we've presented, it's not just about driven by the need because of COVID, what's happening. We felt the need to really get a data-driven analysis behind regional tourism for the last couple of years. We've had a lot of projects that are looking at, you know, how they can develop their regions, infrastructure, tourism and experience. And we got the whole team involved on this, so this is very much a team effort. So thanks to the rest of the AHS team who have done this. And what we found, the scorecard approach highlighted a number of things. Most importantly, that it's not just the aesthetic appeal of a destination, but it is the other indicators that really drive the success factors for regional tourism. So the economic indicators, the population, where do we get the staff from? How does the employment impact the region in making it successful for tourism development? The tourism contribution to the economy. I mean, some of the information that came out of both Victoria and New South Wales there is that, you know, we have hotel market segmentation that just can't be leisure driven. It has to be looking at meeting and events, and we can see that there's a bit of a gap in that opportunity in our analysis. The tourism visitation, investing in domestic tourism, it is one of our biggest economic earners, and we sort of allude a lot to international, but domestic tourism, really understanding visitation trends and who is the domestic tourist of today, because they are very much changing. And COVID, what that has done is just added to that change and the need to understand it better. And finally, the tourism infrastructure, the accessibility, that's where you see some of these regions being outstanding. It's because access is really good. You can fly in there, or the road networks have been well developed. And the infrastructure around experience, it's something that we took very seriously, and we have such a great nature-based areas, which is what we're leading to in our case study discussion right now. So all of these factors have really, there's opportunities that we've highlighted, but the people we're talking to now will give us an idea of what the challenges are. To start with, we have Guy Obeid. He's the Strategic Project Director for Rocdon Development, and this is the 12 Apostles Hot Springs and Resort. We've been very fortunate to be, have worked on the consulting and some of this for Guy, and it's a really unique project. I'll tell you a bit about Guy to start with. He's the founder of CMFC, an organisation that's completed over 8,000 transactions in different fields, including equipment finance, development funding and agri-finance. And Guy has established several high multi-site retail brands, including Rhodes & Beckett and Sneaker Boy, which is an omni-channel retailer. So after selling most of CMFC, Guy has now concentrated on this spectacular project. And obviously, Guy, your project includes distinct zones with public natural hot springs, which makes it so exciting for Australia, food and beverage and upper upscale hotel resort experience. And all this is within walking distance of the iconic 12 Apostles and within the Great Ocean Road and the Otway National Park. Can you tell us, we rated it #1 destination for our scorecard. Can you tell us a little bit about the vision that behind this project, Guy?
I can, Jennifer. Thank you for all your work and for inviting me on. Obviously, I'm thrilled that you think that Great Ocean Road is the #1 tourism region. That's very exciting. But it's interesting also that some of the conclusions that you found where it's ranked #1 for visitation, but 7 for infrastructure. And that seems to line up with the kind of common response you get when you talk to people about the 12 Apostles. You know, we drove down there, it was beautiful. We got there, we took some photos, and we came home. And so I think that there's always been a clear opportunity to create something down there that adds to that visitor experience. And we spent a lot of time trying to understand that market. And so I think the vision for that project really is about adding to the visitor experience while being respectful of this extraordinary rugged, unsport coastline, and also being respectful of the community down there, who are very protective, rightly so, of this extraordinary public asset. So in the end, we sort of came to a view of 2 clear markets, a day tripper market. And so the offering in the project deals with those day trippers in terms of basics like car parking, which is in short supply down there, you know, something to eat. And so the whole development, the whole public part of the development is set around an amphitheatre with food and beverage offerings, and the hero product, which will be Australia's largest hot spring bathing operation. And then the other side of the development really deals with multi-day travellers. And that's an upmarket wellness resort, again, with bathing as its hero product.
So I see, yeah, from what we've had a discussion, and you had some real challenges with the project, and I can understand what you're saying there. The day tripper market is very much well known for the Great Ocean Road, and how do we capture and give them a different experience, which is what the hot springs were about, and then to give people somewhere else to stay. And as you said, there's not a lot of accommodation options in that part of the Great Ocean Road. So the type of the development process you went through and the challenges you had, we talked particularly about the water rights, which I have not had that experience with. Can you give us an outline of what that actually meant?
Well, I mean, the challenges of doing something like this are endless. But I mean, you talk about the water rights, and that was a particularly interesting example of how difficult something like this can be. There are 2 groundwater formations in that region. The Dillon Aquifer, which runs to about 600 metres deep, and then the Parati Formation, which starts at about 750 metres and goes through to about 1,000 metres. Because the Dillon Aquifer provides the local area's water, there's a moratorium, or there was a moratorium on bores going below 300 metres. Now, even though the Parati Formation, where we intend to draw our hot water from, is completely separate from the Dillon Aquifer, it still got caught up in that moratorium. And so the process of having that recognition, or having it recognised that the Parati Formation, the moratorium shouldn't apply to the Parati Formation, was very complex and very long-winded. But that's just one example of the kinds of issues you have to try and deal with.
But you also had a lot of different stakeholders involved, and you would have had to work with the state government, and navigating the process. I think you discussed with us that most of all the tourism process, the stakeholders there are very positive. But as the EPA, you had to develop a permit for sewerage. Then you've also got the community, the state government, and how people feel about developments. And you mentioned that was really positive, yet for all these strengths, it's still something that's very hard to get across the line. So how long have you been going at this project, Guy?
About 5 years. Donnie Musto, who's the principal of Rocdon, is just extraordinarily talented at managing these sorts of processes. And when you look at a site like this and there's no sewerage, and that limits the scale of development, the ability to get an EPA permit to process our own sewage and use the treated water to vegetate the site is a first for Victoria. It's a complicated process, but again, they're the processes that unlock the development potential of this. Crafting a development that added something to the community, ensured some dollars stayed in the community from all that visitation, but was respectful to the, to the natural beauty of the area and to the community concerns. It's also a very difficult thing, and I think we're really pleased that we ended up with significant support. But as you say, with all of that support, the challenges are really, really daunting.
And the other, I know working around when we looked at the project, it's the benchmarking as well, which is really challenging. A lot of these experiences that are internationally well known and appreciated by people, we really don't have enough of that in Australia. And this is a good example of it. So the benchmarks were difficult to find.
Yeah, very much so. And I mean, listening to your presentation earlier, you can see the depth of data about hotel rooms and average spends and all of those things. When you look at Australia, there are 20,000 onsens in Japan, 2,500 hot springs in China, and 2 in Victoria. And so getting the kind of data that, helps you understand what might happen is interesting. So for example, Iceland has a facility called the Blue Lagoon. And if you take Iceland's population of about 360,000 people, plus their annual tourism visitation of about 2 million people, the Blue Lagoon gets visitors of about 1.3 million people a year. So it's like a 55% capture rate. I'd love to get 55% of the 6 million visitors to the Great Ocean Road region, but I'm not sure that our business case should be built on that.
Which is an interesting extension of the questions towards raising capital. Again, regional projects, they're usually complex, they're isolated, and raising capital and the acceptance by lenders for unique leisure destinations. What was your experience in terms of raising capital? And also, do you think with COVID and all of the domestic interest, there's a change in thinking by financial lenders for the risk that tourism seems to have?
If I can start with your second question first, I think that COVID represents some amazing opportunities for regional tourism. I think from the stats that I understand, more Australians travel overseas and we get overseas visitors. Australians spend more overseas than visitors spend here. And so I think that if we're all forced to stay here for the next period of time, I think regional tourism will benefit from that. I think that attitude is starting to be understood, but again, instinctively knowing that that's the case and then having real data or real confidence in relying on that for financial institutions is a little more, I think there's a fair bit of effort to get them to really understand that. Having said that, the financial institutions we're talking to about debt seem to be positive, and so our early indications are great. Building a business case for the capital with the help from you guys and Ernst & Young, our capital advisors. So we've got a case that's built and ready to go to the market for capital, but we're waiting for some of these COVID restrictions to be reduced so that we can launch that process.
So I suppose then, there's a couple of questions just come in for you, Guy. But one thing obviously is data and analysis is going to assist in understanding what's happening for markets regionally. Is there any, for the stakeholders and the partnerships that are involved in this process, I suppose we're trying to get everyone to understand that these are the things we need to address. But what advice would you give to regional or owners, developers trying to take on the regional experience?
Go home, read a book. No, I'm joking. Look, I think find the best consultants because I think that's the way that you resolve your vision with relevance to the market, with the interests of stakeholders. So, for example, Neil Architecture have done an extraordinary job in designing a building that has a very low visual impact and is environmentally sensible. And so that builds a whole sense in the community that we're there to do things responsibly. The work that you guys did, the work that Ernst & Young have done, all of that has resolved a vision into something that's marketable. So I think that would probably be my number one piece of advice: get good consultants.
Thank you, Guy. Sounds like a bit of an advertorial, but no, it's not. What I would say is we do have a couple of questions, but I'd like to also get on to, we've got, you know, Max and Suzanne here to talk about LILIANFELS, Blue Mountains experience, and Q Station. So we want to try and come back. I do realise it's running slightly over, but it's well worth the wait to talk to these guys and have this experience. So thank you, Guy. We'll come back to you for questions, and it's a really interesting project, this 12 Apostles Hot Springs Resort. It's a fascinating, great destination, and good to see someone taking on such a difficult project. So moving on now, we are hopping back into New South Wales. Obviously, the challenges in New South Wales, there's different sides in the states, but the challenges are very similar. So we have Max Player, Director of Mawland Group, who's sitting next to me here right now, and Suzanne Stanton, who's the Director of Mawland Group as well. And they're going to talk to us about LILIANFELS Blue Mountains and Q Station Manly. So Max is probably well known, as well as Suzanne will be well known. They've both been in the industry a long time. Max is a respected, passionate hospitality professional. He's highly regarded by his peers and is an active mentor in our industry. He's worked in hospitality for over 40 years and founding director, owner of the Blue Mountains International Hotel Management School, many alumni in the industry, and the company director for Mawland Group, with LILIANFELS in the Blue Mountains and Q Station in the Sydney Harbour National Park as successful conservation projects that he's worked with. Suzanne has been with Max for a long time. She is the lawyer who is behind the complicated difficulties with actually dealing with new hotel experiences and development. So both of them I would consider pioneers in this space. So Max, just to start with, tell us about the challenges you encounter with LILIANFELS and the Blue Mountains, and what the difficulties, particularly because you're on the edge of the famous Blue Mountains National Park. And I know Suzanne and Max are both going to answer us on these different topics.
That would be a pleasure. Before I start, maybe I should say to Guy, keep at it. Don't lose sight of your vision, because if you don't have vision, you can't get anywhere. And sure, there are challenges, but it's strange. I'm just looking at your youth.
We look like that once.
Because when I embarked on LILIANFELS, it's 30 years ago now. Okay, so I was 30 years younger, and you had to have the energy to actually keep going with things. So to answer your question, Jennifer, look, there were some challenges there. The first thing we had to do, we bought the old LILIANFELS house the first time, and held on to that for a while, and then we had to consolidate the site, okay? Because what we were trying to do was to create a guest house, an absolutely beautiful guest house of 86 rooms, sitting on essentially on the escarpment there at Blue Mountains or Echo Point there. Our vision was, I thought, fairly perfect, except that the friends of Echo Point didn't think so, and so we had a lot of objection as to what we were doing. And you really have to work your way through that process, and I know the Guy is doing that in talking to a lot of the stakeholders in the area there. Yeah. So we went to Probus groups and Rotary and explained to them the situation, and in time, okay, we got essentially
in time. How long was in time?
well, it was probably a 2 to 3 year process, okay, that we had to go through, and but during that period of time, there was changes of council, okay, and to be fair, at the time, okay, it was the Labor-orientated council that actually allowed this to be pushed through. Right. Okay. Basically through their caucus members and whatever else. Okay, but it was good. But there was a lot of legal things that we had to go through with the fact of combining all of these sites together. Yeah. And I think Suzanne might want to just take a little bit on that.
what Max is alluding to here, and thank you very much for having us here. What Max is alluding to is what we found in doing that consolidation. All of a sudden, it became apparent that there were covenants all over the site, which meant that the properties behind and immediately adjacent to the property had the right to require this property to only be one level above the ground. And of course, Max's dream for a guest house involved a little bit more upstairs than one level.
Particular for the views,
obviously for the views. And these are covenants that had been put on in the early 1920s, when it was only anticipated that there would be residential properties there. And so what we had to do was determine, going around the area, which properties had the benefit of these covenants, and then go and deal with every single one of those people individually. We joke that the first person got a fruit bowl, the last person got a lot more than that. But I guess what we're talking about really in this part of the discussion is we're dealing with here the natural concern of the local residents and the regulatory authorities to the concept of change, to what they think is theirs, their property. And this will come up again when we talk about Q Station. And so, you know, there at LILIANFELS, we're dealing with the council and you're dealing with the Friends of Echo Point, but you're also dealing with all of those individual members of the community who really believe that this is of utmost importance to their own quality of life. And
they have their own passion.
They have their own passion. And of course, some of those people, their passion is getting their kids jobs. And so they really want to join you in the fight, or getting their area noticed, and they'll join you in the fight. But there are often people who want to stand back and don't want any change at all. And again, when we get to talking about Q Station, I might move on with that a bit more.
So that was the covenants, was the legal and regulatory process that you were dealing with.
And that probably added 12 months.
12 months on. And you know, knowing Blue Mountains being so iconic, everybody recognises and understands what that is. So you found you had the support of regional councils. I think we all agree we have the support of the tourism industry, but particular to that process is, you know, not only that, there is governments, there's stakeholders, there's communities, and heritage to deal with as well. So the regional councils for both, if we both talk about both of those projects, both the stakeholders were supportive of both Q Station and the
Yes, they were. I mean, the council at the end was very, very supportive of what we were doing. And I think that was, you know, that really helped us along the line. When we had to create a design, okay, and put all those conceptual ideas together, that then had some limitations to what we do, because as Suzanne said, we had like, you know, height limits and things like that.
Which doesn't go well when you're trying to actually put rooms in.
No,
at scale to your dream.
Exactly right. And you know, and what we also found out is that as we were excavating, okay, we found an old coal mine there. Okay, so there were all sorts of interesting things. So, Guy, you're not going to be fighting that, but you're going to be fighting other dramas, because the natural thing. But you get over it. But what was interesting when we started, the interest rate was 22%. So today, it's completely different. But even noting that high interest rate, you're still able to get things done. Yeah, it's quite amazing.
And obviously Q Station was a different opportunity, very much involved with national parks.
Yes, rather than the council.
I know it's documented that we know in the industry what happened with Q Station, but for the people listening, can you give us the abbreviated highs and lows of Q Station if possible?
Well, just to start with, okay, I mean, I found, you know, there was a tender process back in 1993. So Guy, you got a long way to go. So 1993, but we actually signed a lease after going through a whole process of EISs and community consultation. And but you know, in 2006 we signed a lease, okay, and in 2008 we actually finally got the operation going. So that period between 2006 and 2008, there was a building program. Right. So what we had to do, we had to adapt this national heritage building, 65 odd buildings there, into a hotel complex. That was the essence of it. But with it, what we had told the council and what we had told the probably the national parks. That concept that we came up with all those years ago is still the same concept that we came up with today.
Yeah, and
which is fantastic.
I might add, with Q Station, you're dealing with council, with national parks more, but we're dealing with national parks, RMS, planning, primary industries, because there's seagrass and a wharf, and heritage. And obviously there were many community groups who were actively involved. And Max talked about the Friends of Echo Point. Here we had the Friends of Quarantine Station, known as FROPS. And what was most important for us, I think, was to develop the confidence of all of those groups in the project and the actors, because there's always going to be a lot of gossip, and I'm sure Guy's finding this. Whenever there's a tourism project coming, there's always going to be gossip that it's going to be multi-story and it's going to include marinas.
And international focus.
International focus,
exactly.
and you're not going to be able to get a meat pie and all that sort of stuff. And so I think what has been really important to us has been to develop the confidence of the government and the authorities, and most importantly the local community in us and the actors involved in our project, and then convince them that it is for the greater good of development in the area. And but also you've got to remember it's not just about the development, because all of these developments, like ours in particular and Guy's, it's going to be about compliance moving forward. So you can't really annoy the government and the various authorities up front.
It's got to be a collaboration.
Because compliance has to continue. So compliance
and how does the community feel now after the fact? I mean, for those of you who haven't experienced Quarantine Station, Q Station, it is really worth it, because it is combining experience and hospitality and F&B and meetings industry, and that's actually what we're talking about. For so now there's quite an acceptance.
People
obviously
love it. Love it. And people say finally can get good coffee in the national park. But yes, there's a lot of community support now. And of course we remain members of the local Chamber of Commerce and the local stakeholders groups, and we work really hard on keeping those connections.
So do you, and similar question for you, because I'm aware of time here, your advice for considering any tourism development? We can clearly see there's a lot of opportunity in our nature-based areas, whether they're national parks, foreshore authorities, etc. There's a lot of opportunity out there in both states.
Apart from buying a really good moisturiser.
I really do think the importance is that it does take time. Okay, I think whether it's regionally or even where we are, strangely, Manly's classified as a region. We're not part of Sydney. Okay, we're on our
regional.
Own. It's weird. It's weird, but you have to have perseverance. That's what it's all about. If you've got your vision right, okay, and you're sincere about what you're doing, you will succeed.
And passionate
and get in early with the stakeholders and the community, and I think that's something we all know. Well, thank you very much. We really appreciate the people involved. Guy talking to us from Victoria, Suzanne and Max coming in. These guys have really been pioneers, and Guy should probably talk to you a lot more.
We'd love to.
So I'll hand back over to Valerie, and we can roll up if there's any questions. There is one on operators. Do we have time for that, Valerie? Is there any?
Yes. If the question was to Guy, are there any challenges in sourcing operators, either local or international?
Thanks, Valerie. And thanks, Max and Suzanne, for the encouragement and for saying that I look young. Look, I think in terms of operators, I think there's no shortage of operators. And I think there's no shortage of operators that are interested. I think the bigger challenge is finding an operator that suits your proposition, suits your brand, and then having done that, make sure they've got enough skin in the game so that your interests are aligned. That answers your question.
Very good point.
Thank you, Guy. And I do encourage people before you leave to pop questions which we can follow up with an answer, or email at Buchan Events, and we can certainly follow up for you. So thank you, Damien and Spring and Jennifer and AHS for incredible information. I know for a fact that is months and months of research that went into that data. and it's wonderful to hear from the leading advisors in the industry. And thank you, Guy and Max. We value your knowledge and your obvious passion for our tourism industry. There are clearly strong opportunities in regional areas as we emerge out of this year, and domestic tourism will be a growing market and hopefully be a big support to our economy. But there will be challenges. Moving ahead, we would like to invite you further to our next forum, where we'll look at the next steps. There's obvious opportunities. What do you do next? What are the considerations moving forward? And with AHS, we'll be looking at equipping you with further important knowledge around project inception, pre-design, planning and infrastructure issues, industry bodies that can support, and key design drivers in terms of achieving a positive social and environmental impact in very sensitive areas, regional areas. So thank you for joining us today. I encourage you to forward questions after the event if something comes to mind. Thank you, everyone.
Great, thanks, Valerie. Thanks, Guy.
Guys.
Okay.
Out, yes.